Welcome back to our special show, State of the Economy. We've been discussing the just released GDP numbers for the third quarter and the revised numbers for 3 years, 22-23, 23-24, 24-25, with a bunch of elite economists. I have been speaking with Dr. Pronab Sen, Kaushik Das, Abhishek Upadhyay, and Ranjani Sinha. Gentlemen, and Ranjani, thank you very much for your patience and continuing to be with us. Let me quickly ask you the fourth quarter estimates from what you already know about the first 9 months. The first 9-month growth, of course, is 6.2% in terms of GVA and 6.1% in terms of GDP. Kaushik, what's your current fourth quarter number and full year number for the current year?
So we have a 6.5% number, and we had a GDP number close to 6.5%. So I'm not surprised with this revision that has happened to the previous numbers, that 5.6 from 5.4. Whether it goes higher later, we'll see. But
what's
for a
the
while,
fourth quarter number?
It's 6.5 at this stage. I'll have to see what revisions have been made to the January, March of 24. But I'm feeling nice today because I gave a 6.2% forecast. Very few times you get it bang on target. So that way it's nice. But one key point, what I like what Rajni pointed out, is that investments is below 6%. So that is one area where we need to focus. One good thing is that the government has picked up spending from December. So January, March, and April, June, July, September, all these numbers on a year-on-year basis will look very strong, because last year, April, September was very low from the government spending side. But the problem is on the private capex side, given the uncertainty in the global macro space. Any manufacturer, those who also export, I doubt whether they'll want to increase capex in a big way in this environment. So, you probably would see subdued investment growth for some more time. And hopefully the tax measures and the rate cuts, the macroprudential norms which have been eased over a period of time, that helps sustain the consumption growth on the urban side. Hopefully you get a good monsoon, the rural sector does well, and you get to that 6.5% growth in FY26.
Abhishek, I just want to ask you, this 6.1% is the 9-month GDP growth. Over this 6.1, if we have to achieve 6.5 for the full year, as you say, the asking rate for Q4 is unrealistic, isn't it?
We were assuming growth in October-March period to be closer to 6.5. Based on the fresh estimates, it seems NSO is predicting 6.9% kind of average. And 6.2 was slightly lower than our estimate. So that makes this acceleration, from Q3 to Q4 even more stark. Again, it is likely government spending and agri growth will have to play a key role, but these are already reasonably strong in the third quarter itself. So it is the other sectors which will have to basically take the burden here. So risk could be towards a downside there. But we have to see, capex growth, etc., how it pans out. We expected capex growth to be better in Q3. It seems it is not, so strong. Government has released the fiscal numbers just now also, which shows strong capex momentum from December has continued into January with a strong YOY growth there. But I agree, risk to growth for current quarter could be on the downside.
Okay, what's your number now?
We are not, we'll have to see how the base, etc. is moved, but we will not change that number much, Latha. So we'll still assume closer to 6.5, maybe slightly higher.
Okay. So there is a danger to the 6.5 GDP growth, second advance estimate forecast going wrong, because it is assuming too strong a growth in the fourth quarter. Rajni, any thoughts? What is your fourth quarter number? And do you think this 6.5, which MOSPI is forecasting, may not be attained?
It is achievable. We are expecting a GDP growth of around 7% in the fourth quarter. So we are expecting this consumption pickup that we have seen in the third quarter. We expect it to gather further momentum. Because as food inflation moderates, we will see consumption picking up. So we will see impact of the Mahakumbh. So we are expecting consumption GDP to pick up. Investment GDP, while it has disappointed in the third quarter, it should pick up in the fourth quarter because government capex has picked up quite sharp.
Fair enough.
So hence we are expecting a growth of around 7%. And for the full year, we are expecting around 6.4 to 6.5% growth for FY25.
Okay, so the MOSPI 6.5% might still be achieved. Well, it's not a big jump from 6.4 to 6.5, but nevertheless. Dr. Sen, your final thoughts after you look at all the numbers. It's a little confusing that, all the numbers in the past have been revised higher. Would you say the economy is in a slowdown mode at all? Or do you think it is just the base effect and we have coasted on fine despite such a large base?
No, I mean, it depends on how you interpret the word slowdown, Latha. I mean, yes, I think we are. I mean, we are starting to come back to what I think all of us collectively consider the sustainable growth for the country, to around 6.5. But, the expectations that had been built up was that we are a 7.5% plus economy. So compared to that, yes, it does look like a slowdown. Okay. But about the details, the sort of changes in the previous year's estimates actually complicates the calculation a little bit, right? Because a lot depends on how it's distributed across the quarters.
Yes, sir.
So my original forecast for the fourth quarter was around 6.5%, slightly shy of that. But now with the changes, everything depends on what they've done to quarter four of the previous, which I have not seen.
Okay, no, that's a fair point, sir. But just a very quick comment from you on how you will see the global headwinds, the tariff headwinds impacting next year. Should we be prepared for a slower growth because of these likely tariff headwinds? I mean, sheer uncertainty, even if our own, exports as a percentage of GDP to the US is just 2% or even less than that. In spite of it, do you think this uncertainty will hit us or we can still manage because of the boost from liquidity, rates, budget? What's your sense of next year?
Well, Latha, the point is that the headwinds are strong. So it's going to be reflected certainly in our trade numbers. It will also get reflected in our capex numbers. I would imagine that they would be getting even slower than they are now. And it's pretty bad at the moment. Now, the question is, can the government actually overcome this and push things forward? Now, if we take the budget numbers as presented, that's not going to help a whole lot.
Okay.
So unless there is revision in the budget at some point, I think we are looking for pretty strong headwinds next year.
Okay. Well, quickly, if you all can give me a monosyllabic answer, the rest of you, in terms of what is your current FY26 number? Kaushik?
Latha?
Your FY26 number, GDP?
Yeah, GDP is 6.5%.
Okay. Abhishek?
6.8%.
Ranjani?
7%.
Sorry?
0.7.
Oh, that's good. Okay. Well, gentlemen and Ranjani, thank you very much for joining me. The key takeaway from the numbers is that this is a good number. At third quarter GDP at 6.2% is good because we thought the base was 8.6%. The base actually is, well over 9%, 9.2 if I'm not mistaken. The last year's base has been revised higher by about 60,000 crores. So the third quarter number of 6.2 should be considered good. Overall, the economy has been growing faster than we thought. The numbers are all revised to revised higher than what we earlier thought. So my key takeaway would be that the GDP numbers should make us happy. The economy is growing a little better than we thought, but there is no mistaking the slowdown from the previous year and the fact that we could face headwinds next year. On that note, we wind up this discussion on the state of the economy. Do keep it with CNBC-TV18. There's lots more lined up for you.